Hello and welcome to Finextra at Sibos. Today I'm speaking to Jeroen Dekker of Fiserv, and we're going to talk about financial crime. You know, financial crime is a huge topic for global financial institutions. What are some of the trends we're seeing in financial crime, and also what are some of the threats?
So there are trends happening on a number of fronts. We can look at what the criminals are doing, we can look at what the regulators are doing, we can look at what the financial institutions themselves are doing to fight against it and what they're thinking. And also we can have a look at the technology landscape, right, that's affecting risks and vulnerabilities. So if we start with what the criminals are doing, we see that they keep looking for the weak spots in defenses. And in the AML landscape, that can be about countries that they look for that have weak AML controls. Then closer to the ground, it's about which financial institution has the weaker controls, right? Can they spot a vulnerability, then they move there. Within an institution, within the different channels, they can go and look for the weaknesses in a single point defense. So, and they have that flexibility, right? They have the option of picking their spots, and they're very good at that. The second thing we're seeing with the criminals is that they've become larger, more powerful, more aggressive in terms of the technology that they bring to bear in their attacks. And also where in the past it was more blunt force attacks, right? They would send out an email to 100,000 people and hope that someone would bite. They're now doing what's called spear phishing, where they really seek out a high value customer, a business customer for example, and really go out of their way to get into their account and steal their money. And so also it would be nice if I could answer this by saying that they've moved on from a certain kind of fraud and are only focusing on online banking, for example. That's not the case. What we see is that they keep going after checks, they keep going after cards, and they keep going after all the new channels. So those are trends from the criminals' perspective, right? Then you have the regulators, where in the past you'd have the compliance folks looking after AML and terrorist financing, and the fraud folks were there to prevent losses. Well, their domains have grown. You see regulations against tax evasion, you see regulations against corruption and bribery. Regulators are moving into the fraud space and dictating that banks take adequate measures to protect their online banking channels, for example. So that whole spectrum is growing and causing more things for banks to do and look at. Then the banks themselves, obviously with the economy being what it is, they have tightening budgets, so they're looking for their teams to be ever more efficient and ever more effective. And finally, while all that's going on, the world, as we see on this conference here, is not standing still in terms of technology. Whenever SEPA is introduced, whenever banks themselves are introducing new P2P mobile payment platforms, all of those bring new risks and vulnerabilities for your financial crime people to think about and work through. So those would be some of the trends that come to mind.
You talked a little bit about, you mentioned regulations. So, you know, I mean, how can financial services use some of the regulatory guidelines to protect themselves against some of these financial crimes?
Well, first off, the word guidelines is interesting, right? So they disguise these regulations, and probably for good reason, but they call them guidelines, they call them recommendations, like the FATF recommendations. They'll do case studies. The first thing that financial institutions need to keep in mind is that they expect you to live up to those things, right? Even though they phrase them in a friendly way, you need to follow them. And the way to use them, well, first off, it gives you a chance to hammer the message through the entire organization that this is serious, right? It's not just someone's opinion that you need to do something. It's a regulatory guideline, and that allows you to get board attention, right? Perhaps budgets to invest in technology to fight those financial crimes, and instill that culture of compliance, I guess, throughout the organization. That it's there for a reason. It's for a good reason. It's to protect your institution as much as society at large. So then closer to the guidelines themselves, follow them, but follow their spirit, right? See what they're trying to do and then apply that to your own institution, your own unique institution, your own unique circumstances of where you do business, what kind of products you have, what kind of customers you have. So don't take them all too literal, be smart about how you apply them. And there's plenty to go around, right? Ranging from the FFIEC guidance in the US against internet banking fraud, which has an EU equivalent from the European Central Bank that came out last year, to sort of the real compliance areas of FATCA, etc., which still has a lot of questions around it and delay, as we heard recently. But you have no choice but to use them, so make the best of it.
You mentioned also that financial criminals aren't just going after online banking; they're going after other bank channels, such as cards and checks. And so, what are some of the strategies banks can use to protect themselves against these threats?
There's a lot of them, and a good way to look at it, I think, is that it's sort of a layered defense, and that's what some of the guidelines also start saying, that there is no silver bullet to stop financial crime in its tracks. It's a combination of processes and tools and methods that together can do as good a job as possible of keeping them out. So that starts with education internally, but also customer awareness of the threats that are out there. To putting good locks on the door is the metaphor that I tend to use, right? Whether that's multi-factor authentication, biometrics, what have you, to keep them out. Invariably, though, realize that those locks get compromised. It's a technological arms race that the criminals are not losing yet. And so what our message is that behind that should sit this thing called anomaly detection, right? Which is this way of looking at customers and their behavior, understand how they normally behave, and therefore you can understand if something's off. Something's bound to be off, right? Whether it's a device being used to access the accounts of multiple customers, whether it's the customer behavior, there's always something that's likely to give away the fact that it's a fraudster trying to steal or get away with the money. And the last piece is centralized investigation. Often you have these different fraud silos, these different tools that are used for certain parts of the business, certain channels. Try and bring all that intelligence together into a single system that can give you a complete view. You can correlate those things, you can streamline your investigative processes and share knowledge across the institution. So if you can bring those various components together into a single orchestrated strategy, then you're in a much better place. But the lesson there is, you don't ever think you're done, right? Because your business keeps moving and the criminals keep moving.